Before we get into the cheat sheet and understand what happened in the past 24 hours, let's just have a quick look at Bitcoin. We can see from past cycles we had a lot of price appreciation, especially the 2016 cycle, and the 2020 cycle is above that. But what we've seen recently is a lot of negative price action. This price action has been caused by potential tariff wars. Now, what we're seeing here is a rounding of sell pressure. We could make our way up to the 106,000, so please bear that in mind. We always have three-dimensional price thinking. We think about the up case, the neutral case, and also the down case. Let's quickly check through the main markets. In the last trading session, we saw outperformance by Tesla and also Apple did well. Intel came up 6.1%. Nvidia, Microsoft, Amazon, and Google were all hit. The energy sector came down. Overall, all sectors were down 0.21%. Consumer discretionary was the best sector, energy was the worst. The fear and greed index inside the stock market is currently 45. 1 week ago, it was 40. 1 month ago, it was 26. We're starting to see the very early signs of hope returning into the markets. With Bitcoin starting to base around, we're starting to see signs of positive momentum inside the crypto market. BNB has been outstanding. Looking through the memes, SHIB is the outstanding one there. In terms of the large cap, we can see a little bit of positive momentum inside Uni and JUP. In CFI, not much happening. What about on-chain? We can see Ethereum up 3.58%, BNB nearly 11% up. Don't forget, it's much harder to see big increases in big projects and a lot easier to see big increases in smaller cap projects. Bitcoin is currently up 2.35% to 97,352. Currently, the Crypto Fear and Greed Index is 46. It's been dropping like a brick, but it's starting to flatten out. And especially because we're seeing the stock market Fear and Greed Index, optimism is returning into the market. Currently, the Crypto Fear and Greed Index is 46. It's been dropping like a brick, but it's starting to flatten out. And especially because we're seeing the stock market Fear and Greed Index, optimism is returning into the market. Across the past 24 hours, there's been $300 million worth of liquidations inside the crypto market, with the majority of them being long liquidations. 137,000 traders and investors got liquidated because they were using leverage, and they did so at unfortunately the wrong time. But it's really tricky with crypto, as you'll see very shortly. When we look across the past 24 hours, mainly long liquidations, 12 starting to get some short. The past 4 hours, a lot of short liquidations. This is boosting price up. And in the past hour, pretty much all short liquidations. Price is always moving in a wave. When the CPI data was released, we saw a huge whipsaw inside the stock market as well as the crypto market. All markets are intercorrelated and interconnected. I'll be going into the CPI a little bit later on, but you can see the print is way hotter than anticipated. Everybody somehow, for some reason, expected the CPI to come down. We didn't. The CPI is the measure of inflation, and inflation is everywhere. It is persistent. Probability of a rate cut has just dropped from 5% yesterday to 2.5% today. There's a probability of a 97.5% no change in interest rates, but it gets a lot worse than that. I'll be discussing it inside the video. When looking at the top 11, especially over the past 24 hours, we can see BNB is up the most. This is because the Securities Exchange Commission paused their legal battle, awaiting the President's cryptocurrency task force action items. We can also see that Dogecoin is doing rather well at the current time, as is Ethereum, just moderately in front of the 2% increase in Bitcoin. The greatest gainers in the past 24 hours, PancakeSwap Previously Phantom, now Sonic, SPX, BNB, JTO, XCN, and others. The greatest losers in the past 24 hours: Helium, BGB, Dexy, ENA, Teo, and Ray. Not to mention Trump is in there. Yesterday, as the markets were so red, I wanted to give you an insight that you could make money in a downward market or a trending market or just a consolidating market. So yesterday's video was about past trades. When we look at the actual structure of the crypto market we've seen, actually, let me just put on that structure so we can see what smart money sees. We always need to know where the true structural support and resistance levels are inside the market. And we can see down at that 94,574 over the past 24 hours, that has held incredibly well. That's largely because there are a lot of buyers inhabiting these levels, even though the CPI print came out the hottest that it's been since literally May of 2023. And we saw a huge spike down. There was so much fear, and it coincided with Bitcoin hitting that 96,493 level of structural overhead resistance. Previously, we'd been watching the 98,384 level and also the 96,493. If it broke down, it would create negative structural attraction down to this lower area. But as there were so many buyers in there, we would anticipate either a consolidate or bounce and reflect. The SEC stepping back from Binance is a major win for crypto. In other crypto news, Matthew Siegel from the $114 billion Van Eck says that demand from 20 US Bitcoin reserve bills could see the states buy over 242,787 Bitcoin, worth approximately $23.5 billion. And this is just within the US. And as you know, 20 is not the totality of the US states. I'm sure the others will be coming along shortly. Now, what are the key levels from a structural perspective we need to keep our eye on today? Well, it's literally back to exactly where it was 2 days ago. The 96,493 level is very important to keep your eye on. If we start to break under there, we would expect negative structural attraction down to this gravitational well playing out between 93,432 and 94,574. If we get into here, we could consolidate before breaking up or breaking down. If we get a similar action to what happened here, it would just be stop hunting. That's the downside. The upside is to break across that 98,384 and then progress higher. We do have two light structural resistance levels, one at 99,305 and another one 99,534. You already have, with the CTKS method, the structural resistance levels and the structural support levels inside the market. From 2 days ago, you already knew that if we lost the 96,493, that would put into play the 94,574 and lower levels. If we got above the 98,384, that would put into play the 99,534 levels. You know what's going on. The issue is, what are the other charts doing? In order to determine if clear financial skies exist or it's going to get stormy, the free cheat sheet at ctksmethod.org is the fastest way of doing this analysis. The cheat sheet is composed of 7 rows. The first 2 rows, row 1 and row 2, measure risk. Rows 3 and row 4 measure market sentiment and global financial health. Rows 5, 6, and 7 measure the new economy, the crypto market. CTKSmethod.org service members get 32 TradingView charts with structural indicators and monthly price paths for each chart of each row. Structural indicators help us to minimize fear in trading and investing. They give X-ray vision into financial charts and help you to stack probabilities like professionals do. Let's get into the cheat sheet. On the hotter than anticipated CPI print, we got a huge spike up in the VIX, and row 1 is the VIX, the DXY, dollar yen, the 10-year yields, the 2-year yields, and oil. You can see here, In the VIX chart, that big spike up in the VIX, and what happened to this blue line? What is that blue line? That's Bitcoin. So when the VIX spiked up, what did Bitcoin do? It basically went from about 96,500 down to 94,300. It just dropped like a brick. We often see this. If the yields are increasing, you see the 10-year, it just went nuts and it brought Bitcoin down. Also, the DXY also went nuts. Dollar yen went nuts. Now, what does this mean? If the VIX is going up, the DXY is going up, and the yields are going up, expect negative price momentum inside not only the crypto market, but also the stock market. And we can see all of the yield curves are coming up at the current time. And when we look at the VIX futures, we're seeing them come down at the current time. So that's pretty good. That's actually created a relief rally after this initial drop. The answers to what price is doing are always found in reality in the charts. If you're liking the video so far, please smash that like button and don't forget to subscribe. Hit the notification icon as well. If you want to get a feel across all markets, this is the best place that you could be. Row 2 of the cheat sheet: junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. What do we notice between the interplay of Bitcoin and the row 2 components? We can see that Bitcoin was coming up, and then the CPI data release came out and Bitcoin decided to tank down as the VIX spiked up. One thing that we're noticing now, junk bonds are making their way down. This could foretell some negative price momentum inside the crypto market if we keep on dropping. Please bear this in mind. One of the ways that you can look through junk bonds, because it does stop trading unfortunately, is to look at the Forex pairs, especially the DXY and its counterpart, the euro. You can see this cross triangulation between Bitcoin, which measures risk sensitivity across all markets, and the euro dollar. If the euro dollar continues to come up, we would anticipate that Bitcoin will continue to come up. If the Aussie dollar comes up, we would expect that Bitcoin, crypto, and the stock markets also come up. Everything is intercorrelated and interconnected. We can see even gold and Bitcoin are moving in the same directional basis, as is silver and Bitcoin. What about copper and Bitcoin? Yep, moving the same. A lot of people will just look at Bitcoin's chart and tell you, I know everything that's going to happen with Bitcoin. This is a very retail stance to take, and an uncomfortable one for many people, because Bitcoin is moved by the main markets, by Forex, by commodities, by risk, by government bonds. It is the most intercorrelated and interdependent asset class in existence. Now, one thing that we note here with the Russell 2000, the futures market is pointing to a breakout. Now, that is a very good thing because the Russell is very sensitive to Bitcoin price momentum movements. Just keep your eyes on these Forex pairs. And of course, if the DXY is coming down, the euro is coming up. If dollar yen is coming down, the Aussie dollar is coming up, all things being equal. If you want to stop guessing inside financial markets and act like a professional, because professionals make money, you must be able to understand how to read the cheat sheet and then how to act on it. Row 3 are the major indices, the S&P 500, the Nasdaq, the Dow, and also the Russell. Here we've got a look at the All Countries World Index, literally looking across the entire world. And surprise, surprise, as the major market indices move, so too does the entire world's markets. Now, what does this mean for you? If the US market drops off a cliff, if you're in Australia, just expect the ASX to follow. Or if you're in Japan, expect the Nikkei to follow as well. But if you see recovery, expect recovery also. Notice how the blue line, which is of course Bitcoin. Now, Bitcoin is the most risk-sensitive asset class on the planet. It was already experiencing the risk-off behavior of a hotter than anticipated CPI. Bitcoin reads the risk inside the markets. If you took the strategies that Bitcoin was telling you, you were preparing for a bit of a drop in the major indices. Unfortunately, people just rule out crypto and Bitcoin because people like Warren Buffett and a lot of other people have said, oh, crypto, that doesn't matter. Remember, what you see in the street and what is reality is different. Professionals are different to retail. Retail are emotional traders. Even if they classify themselves as investors, they're trading emotionally. When the market comes down, they will sell. When the market goes up, they will buy. The problem is that they're going to get cut to 1,000 pieces because they buy and sell at the wrong times. This is unfortunately the way of retail. But we are not a retail channel. You are an institution of one right here. And that is what I'm teaching you to do. So we can see, especially when we look at the Russell 2000, we were pushed up only to be just dropped like a brick. This is an institutional game that they play all of the time. And we've seen a partial recovery in the Russell 2000. We're going to have to look at the futures and see if we're getting a continuation in that. When we look at the Dow, it's still under negative price momentum. The Nasdaq has recovered well, not as well. Well, when you think about it, the S&P 500 hasn't recovered to the Nasdaq's position at the current time. The Dow is considerably below that. The Dow is about here. And when we look at the Russell 2000, it's about there as well. You must be able to cross-triangulate charts. It's a very important skill for you to have. Looking into the futures, we can see that Bitcoin dropped substantially when the futures also dropped. And we've seen that Bitcoin has done a degree of recovery, but there is a degree of negative price momentum inside the futures. Now, what does this mean to crypto? If we see a consolidation, and often you'll get a big push up, a bit of a consolidation, a bit of a pullback, and then a decision either way. You must be sensitive to the fact that price is always moving in a wave. It's coming down, it's going up, it's coming down. That's the way that markets work. This is normal. The issue is, if we start to lose structural support, the markets will actually come down. But if we get over structural resistance, the markets will go up. So what you actually need to really do is to understand all of these charts, not from this directional stance. That's just step one. You need to look at the structural stance. Level 1 and Level 2 standard certification draw what are called Stanfield levels or CTKS levels. You'll see these on the charts that I'm going to show you next. Thicker is always stronger. The definition of Stanfield levels or SLs, they're also known as CTKS levels. They represent the most statistically significant levels where smart money will buy or sell in the future, and thicker is always stronger. These are formed across all of price history in strict accordance with Level 1 and Level 2 standard certification from ctksmethod.org. Service members get 32 trading view charts with structural indicators and monthly price paths. It's also really important to understand intercorrelation and interconnection. This big sell-off inside the crypto market was caused by the hotter than anticipated CPI print. In fact, it was so hot, it burnt the fingers of financial markets. To understand intercorrelation and interconnection, we need to look between charts. This is what institutional investors and traders do. They don't look as retail looks. They don't buy when it's up high, because when it's up high, it's probably experiencing structural resistance. They make sure that they get in and out at the right times. The thing that they need to do most of all is to understand where the actual resistance levels are. The most significant structural resistance levels are formed by the CTKS method, which through Level 1 and Level 2 standard certification look across all of price history. Now, what have we noticed here? You can see inside total crypto market cap, and this is the market capitalization of every single crypto, including Bitcoin, Ethereum, and all of the others, right across the crypto market. You can see it just plummeted down on the CPI report. found structural support as well as Bitcoin finding structural support as well, and then flipped up to this structural resistance level. Now we've noted that we're trying to get above this $3.16 trillion structural resistance level to go higher. What will happen now is largely dependent if we get over this level. If we get over it, we're going to the next one. But if we fail to get over it, we're going to the one below. You'll find that negative structural attraction, or NSA, occurs when we can't get through a structural resistance level. We underside retest it and sell off. But the entire crypto market is controlled by many, many variables, including the row 1s, the row 2s, the row 3s. That's why looking at the cheat sheet is vitally important. And inside the Profiting course, I teach people to go through the cheat sheet in under 10 minutes. Now, I'll just teach you something about intercorrelation and interconnection. Notice this structural level playing through here on total and the structural level playing through there. I'm going to pop back to Bitcoin. We can see on Bitcoin's chart this structural level and this structural level. Note how we had a confluence around the 94,574 level and also structural support on total crypto market cap. That's why we got a strong bounce and it went up into structural resistance. Notice that the secondary structural resistance was higher, but this one is lower. What does this mean? It means that there is sell pressure inside the markets. Now, what does that mean? It's more likely that we'll come down to the 96,493 structural support level at the moment than hitting the 98,384. Now, what's the deciding factor? Because we know price is always moving in a wave. It could easily break out. Now, where is the breakout point that we should be looking for? If we manage to break above 97,524, which is playing in around that peak, that is a very positive sign that could create PSA or positive structural attraction to that 98,384. Just keep that level in mind. Bitcoin is currently 96,915. It's moving around. Doing the cheat sheet is wildly important. If you go across to ctksmethod.org and just scroll down the homepage, you can pick it up absolutely free of charge. And there are different videos that can help you out, as well as the official ticker list. What I did yesterday is I just explained some of these trades that were done and represented on the homepage. And they give you an understanding of what you can do and how you can profit from CTKS method structure. With that in mind, I am actually offering several partial scholarships to the Profiting from CTKS Method Structure course. This course is an absolute game changer. It will show you how you can make money in any market. You can do what is just deemed as impossible by other people, but it's possible because you're using a scientific approach or doing a scientific approach. You're predicting tops and bottoms in the cheat sheet components. You know what these different things mean, how they work, how to actually look through the charts, which is an incredibly important thing. And you'll figure out how to overcome the hidden RTP trap and not to get trapped in bad investments and trades, to get market permission and so much more. Please reach out and directly message me on LinkedIn. The Profiting course will give you so many resources. If you're interested in getting into the Profiting course, please apply for that partial scholarship. It is a very, very powerful course. And one of the things that I do with my own trading, I make sure that I've got templates and I put the indicators from the service into these charts so I can see exactly what is going on. I suggest you do exactly the same thing. And if you're a student of the Profiting course, you have this already. There are a ton of free resources inside the Profiting course. Please let me know in the comments, what do you understand about Rule 268? CTKS structure determines price waves. When you do the cheat sheet continuously, when you look at your structural levels, this rule will become absolutely critical to your success. I'm very much looking forward to your responses. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.